I just want to get a view from Shanti Ekambaram. She's been waiting by, of course, Deputy Managing Director of Kotak Mahindra Bank. Ma'am, thank you so much for speaking with us here at NDTV Profit. And let's start with your first view, first take on the budget. Capex number has just come in, as Hiral has told us. It's maybe better than what was expected. We didn't manage to spend all of the budgeted Capex last year. What do you think is the one big highlight in your view?
I think putting more money in the hands of middle class for consumption, savings and investment was expected and was delivered in my view. The fiscal prudence of 4.4 is very good. While we have to get into the details, one of the things we saw this year was that growth had slowed down because of the slowdown of capital expenditure by the government. So while the number that you talked about just now says 11 lakhs, how much they spend and how much they upfront the spending is a direct impact on growth. You know, what ails us right now is the economy has slowed down and we need to pump prime the growth of the economy. I think the budgets have snippets of how to do it, whether it's agriculture, MSME, putting more hands in hands of people. But in my mind, fiscal prudence and putting money in the hand of the middle class, to me, are the two things that really stood out amongst the many small nuggets that were there in the budget.
Okay, Mr. Ekambaram, the thing that we are grappling with is, and good afternoon, Neeraj here, is that one, there is a lot of change made to taxation, as you said, and on the revised base of 10.18, an FY26 capex number of 11.2 lakh crores, which has just come in now, suggests that near circa 10% growth. So that and no big and fiscal consolidation attained too as well. In some sense, the three big things, the troika of the three big things that people were watching out for, seem to have been ticked partially, if not fully.
So, which is what I said. They have committed to 11 lakhs capex, but I think it needs to be upfronted. Last year, one of the issues, Neeraj, was that it was back-ended, of course, due to elections and many other factors. Second, by doing 11 lakh crores, yet increasing, maintaining fiscal prudence is a question that's not fully answered because the tax receipts, there's a reduction of 1 lakh crores by way of giving, the middle class the exemption up to 12 lakhs. But there is also the increase in tax collection significantly by about close to 7 or 10%. So I think we need to do the math, the secret behind the numbers. But right now at a macro level, higher capex, lower fiscal deficit, more shops for the middle class, and keeping it is a little bit of a mystery that we have to work out. But if it happens, I think that's the best thing for the economy. I think we have to address growth. Fiscal done, monetary will probably follow, but I think we have to address growth because you saw the economic survey. 6.3 to 6.8 is far lower than what India needs to grow, which is 7.5 to 8%.
Mr. Ekambaram, Hiral on this side, taking both these aspects into consideration, how are you expecting then the RBI to move this week, next week on Friday, because that's the other aspect on the rate cut cycle that everyone is watching out for?
So what is very important pre to a rate cut is really liquidity. And if you saw that the markets have been in a seizure on liquidity. But I think last week, Reserve Bank came with a slew of measures that gave a ton of liquidity to the market. In my view, that's a precursor to a rate cut in the February policy. And I personally expect a 25 basis points rate cut. I think from an inflation standpoint, we are not yet there. But I think it's always a balance between growth and inflation. Yes, inflation has not reached a sustainable 4%, but I think growth has slipped quite a lot. So my own expectation is a 25 basis points rate cut. But more importantly, we will be looking for the narrative on how liquidity can be provided because it is important for credit flow to the various sectors. It's important for deposit flow to the banks, and it's important for a good market to find the right trades.
You know, I'm just wondering, Mr. Ekambaram, you said growth is the push that is required. From the Capex figure that we have, Do you think that there is enough boost for that growth? Because yes, consumption on one end, middle class, sounds good, feels great, superb headline tomorrow. But the growth issue, do you think that that has been addressed adequately?
I don't think just spending by the government is going to sort of, only spending by the government will give us the growth. I think we have to stimulate private sector. And I think 2-3 things that they talked about in the budget: ease of doing business, right? Whether it's, facilitating exports, whether it is facilitating manufacture in India, whether it is boosting the MSME sector to invest more, or bringing productivity and gains in agriculture sector. It cannot just be achieved by only the government spending Capex. They have to stimulate the economy across various sectors, and investment from the private sector has to follow. Second, foreign capital investments across segments. I mean, for example, the insurance sector raising the stake to 100%, provided they invest the premium in India, was surprising. At least I did not expect it. So I think it is important to stimulate. So the rest of what they talked about need to happen. Very important, ease of doing business, and amongst the various segments I talked.